John McFall.
Warren Buffett, the world's richest financier, on the credit crunch said a couple of weeks ago that the banks exposed themselves too much. They took on too much risk. It's their fault and there's no one else to blame. But this reckless disregard for risk has seen the banks rewarded, the bankers in particular, in both good and bad times. The Governor of the Bank of England and the FSA at the Treasury Select Committee has expressed concern on this incentive structure. Will the Government work with us in our financial stability and transparency inquiry to ensure that we have a payment system that rewards success only and not failure, even as we see today with Bradworth and Bingley, which is a profits warning, and the Chief Executive is departing with a golden nest egg?
Well, I think the Chief Executive in that particular bank is retiring because of health reasons. I think in relation to bonuses generally, I said just a few moments ago, I believe that boards should ensure that the way in which they reward their executives ought to be geared towards the long-term improved performance of their institutions, and that has not always happened. In relation to the general comments my right honourable friend made, it is quite obvious that a number of banks did not understand the nature and the scale of the risk to which they became exposed. However, that doesn't actually help any of us in the immediate period, because, of course, we have to live with and resolve the consequences of that. But I do agree with them that boards ought to be far more diligent in making sure that they reward people for doing things that are right for the company in the long term, because I think the public and their shareholders actually would expect that people should be paid for success and not if they fail.